Matt, welcome to Build with DIMO. I'm glad to have you here today, and I'm excited to talk with you about the insurance market and our partnership, what you're building on the DIMO network. And it'd be helpful for everybody just to understand who you are, what Marble is, and we can take it from there.
Awesome. Well, first of all, thanks, Andy. Really good to be here. We're also excited about the partnership. I think DIMO and Marble have, as I think we'll come to see in the conversation, some really aligned roadmaps and initiatives. Um, really, just as a quick intro, I had a partnerships, all things business development, some sort of revenue activities for Marble. We're a seed stage, seed plus stage startup, but there's all the stages are kind of melding together these days. We've raised about 8 million bucks throughout our life cycle, been around for a little under 3 years at this point. And really what we're trying to do is build the first digital wallet or super app for all things insurance. Empower customers to take data back into their own hands and really use that for the whatever they want really, but ideally to save money and to empower them to improve their coverage, to stay more protected, and overall be better policyholders. So trying to align initiatives across the industry between consumers and carriers as best as we can.
Great. And we have launched an integration in the DIMO mobile app with Marble. It's very basic today, and it'd be great to hear, how that's going so far. And then importantly, we've been chatting a lot about how data might make its way from consumer vehicles into the insurance policy quoting binding process, and would love to hear your vision for how we think that can evolve into the future.
Yeah, so I mean, the partnership, the idea is to kind of take it in phases because as much as I sometimes don't love the whole crawl, walk, run thing. Like let's run if we can. You have to do that in insurance, right? Because at the end of the day, we're at the behest of the carriers. They are the ones taking a lot of the risk on, so we have to kind of move at their pace in many ways. So what we've done with DIMO is we've started small. To your point, we've really made it more of a marketing partnership to start, but the idea is to make it a lot more integrated as we go and start to share data, start to make workflows quicker, easier, allow folks to the ultimate goal is to basically say, okay, if I've got my data on DIMO, right, there's no reason that based on what I'm sharing, we can't create an insurance score and rate insurance business off of that. Or identify if we could say, okay, one thing that Marble has is this digital wallet that we've built. So we could say, what's your policy today, right? They upload their progressive policy, say they're paying, $400 or $500 every 6 months, right? Which is usually the term of an auto policy. There's no reason in the long term, and the vision for me is to say, based on driving behaviors, based on some of the data, right, that DIMO is able to collect, whether that's through the API integrations or through the OBD port. There's no reason why we can't say, hey, listen, you look like you're a great driver. We know, based on the geographies, some of these other data points we have, you should be able to save 100, bucks on your insurance every 6 months.
Yep.
And then based on the integration that we want to have, ideally the challenge with insurance sometimes is why we don't see like digital buy online options proliferating as much as they are in other industries, is that data challenge, right? When you get that quote, oftentimes you need a lot more data. You need to hop on the phone with an agent to say, okay, I want to bind that rate. Based on sort of what we're talking about here, we should be able to eliminate a lot of that friction. And if we can, the idea is ultimately, yeah, I want to click that button and, I want to bind that policy and immediately try to save that person 100, 150 bucks, on their policy.
So I talked with a lot of DIMO users about what they want to, that we have, 30,000 cars connected to the network roughly. And I talked to a lot of businesses and folks who are like maybe investors who are looking at DIMO from the outside in. And the investors and business people always bring up insurance as a use case for the data because there are these telematics programs like Progressive Snapshot or carriers that are collecting driving data from people to price policies better. And when I talk with users, they say, I don't want you to share my data with an insurance company. Like a lot of people bring it up as like, something where they feel like Big Brother is watching. And let's break that down and try to explain what we're talking about doing and why it might be different than a program where you're giving up all of your data to a carrier, and how we think that something a little bit better can be created in a situation where users already have their data verified and uploaded, and then maybe they're going to the market with it after that.
Yeah, no, I think it's a really good question. I think it's one of the challenges that we've seen with like adoption of telematics programs today, right? I think a lot of folks and even agents, right? I hear, I'll listen in on conversations of agents or get feedback that when agents are talking to people about policies, a lot of the time when they're talking about these telematics programs, right, DriveWise, Snapshot, whatever it might be, they tend to be really punitive, right? So hard braking is often picked up really easily. And at the end of the day, we all know, especially driving like for us on the East Coast, it's almost impossible to get like a really good driving score.
Yeah.
So that's a challenge, and people see that and they're like, I don't want to share this data. The critical piece that I think a lot of people miss with these programs, first and foremost, is they're not really out there to punish you, right? They're not gonna increase your rate, right? Once you get on progressive snapshot, right? The idea is for that like trial period, that's what they'll use to price the business. But then once you're on it, a lot of the times the idea is not, okay, we're gonna ding you for this and that. It's generally structured as it's only going to improve your rate, right? So that's sort of a big piece that we try to work through with our customers, right? When we place business and say, okay, here's sort of the long and short with how carriers are going to use your data, like what's going on here. But right at the end of the day, I think the key for us and Marble is, we're regardless of what data the customer like does or doesn't want to share like during the policy during the policy life cycle, that's maybe matters a little bit less to us. We just want to get them the best rate and the most optimal coverage, right?
Right.
And
The data
that's
is
where we're
useful
going to
for
be
shopping
focused on.
around, not necessarily for reducing the rate and being shared directly with the carrier.
Exactly. We're a broker, right? So, at the end of the day, and that's critical for a couple of reasons, right? We're a broker, one, because ideally, right, for us that aligns incentives, right? We get paid when we save people money primarily, right? Or optimize their coverage. That's the big piece for us. And then being a broker also allows us to control that data flow more. So when a customer comes into Marble, we are going to use that data for everything within the Marble ecosystem versus going to some other marketing platforms. They, the big issue with insurance is, oh, am I gonna get spammed with 50 different emails if I, add my email to this list server or hop on this platform.
Yep.
That's not going to happen, right? Because we're controlling that data flow and controlling that customer experience. We're not going to go sell that lead, right? We're gonna try to service that lead with our own agents, right, and our own partnerships. So we want to build around that concept and say, okay, how can we get deeper with our panel of carriers, right? The carriers that we work with to say, we have an unprecedented access through our distribution partners or our marketing partners like DIMO to this data. And we have a great way to get the customers engaged, right? We have this first of its kind insurance platform where it's not based on a transaction, right? It's not based on the simple exchange of value. Our customer relationships are, many of them 2-3 years long already, right? In our short time as a startup. And we see these people coming back, continuing to engage, because our whole idea is let us take the heavy lifting off of you. You're right. One of the first things you said in the question was people don't really care about insurance. They don't want to engage with their insurance. We're okay with that, right? We don't want to be, Robin Hood for insurance and have people logging onto the platform every day. Let us handle that for you, right? That's kind of what we're trying to do.
So can you let me know and maybe break out like the different players in the ecosystem today and kind of how Marble fits into that, and maybe what is different about what you're doing versus the traditional way that people might interact with the insurance market?
Yeah, so there's a couple different, players along the kind of insurance value chain. At the most basic level, you'll have what I call sort of like marketing platforms or aggregators, you could call them. They are generally just going to be advertisers, right? They're going to say, okay, I have a relationship with XYZ carrier. A lot of the times it's through sort of a central platform. And there's a couple out there that allow you to sort of sell clicks, right, or insurance leads. And that's where we, I think, see a lot of the sort of spam problem, right? Is people come onto these platforms, they're hit with an insurance ad because there's some sort of targeting methodology, in the background. And then the second they click over and enter their email, all of a sudden that is getting sent for in this case, in this day and age, a couple, maybe 20, 30 cents a click in some cases, out to, a bunch of different, some carriers, right? Some other aggregators. So it can get really nested.
And
An
carriers
aggregator could
are
be
the
selling to other agents.
Geico, Progressive, State Farm, the kind of household brands that run advertisements on football games, and yeah.
Exactly, right. So, as we kind of work our way up the value chain, right, then you'll have agencies and brokerages, right? So of course you've got your mom and pop's agency, right, on Main Street. They're never going to go away, right? They're great. They have deep customer relationships. A lot of people like to buy insurance that way, and that's awesome, right? For one, we're not trying to eliminate, right, the agents, right? Then you've got the digital players that are looking to improve that, or deliver that experience to someone who maybe wants a more digital touch. That's kind of where we fall in, but we're also trying to behave in many ways like a fintech, right? And bring in a lot of the experiences we've seen have a lot of success around the fintech world, namely called like Mint or Credit Karma, right? About putting that data at folks' fingertips, so when it comes time to use it, it's really easy to do so, right? And so they add their data to Marble once, and then we can kind of perform all the brokerage activities we need, optimizing their policies, saving them money, right? Ultimately, making payments, things like that, without them having to do anything, right? So that's kind of the distribution space. And then you start to get into underwriting, right? So you'll have, two types of underwriters. Generally, you'll have like MGAs or MGUs, managing general agents or managing general underwriters. You'll see a lot of the more digital players, like Branch, ClearCover, those types of carriers, or those types of MGAs. That's how they're set up, because it is a bit more of a cost efficient model than going out and saying, okay, I'm going to become what a lot of people call a full stack carrier, right? Which is your, Progressives, right? Your Geicos, all states, you go down the line, right? You're generally having to hold a lot more risk capital and all that stuff at that point. And then finally, there's the reinsurance companies, right? And that is a really important dynamic, I think, to capture, because the reinsurance companies are primarily the ones, like, they're taking a lot of the risk off of the carriers, right, after they underwrite. So they are pulling a lot of the strings in the world of insurance. And when it comes to telematics programs, to bring it back to this conversation, they are the ones that are really trying to drive that adoption, because at the end of the day, they have the biggest risk exposure, right, and capital exposure. So when you see things like like Drivewise or Snapshot, a lot of the time behind the scenes, that's like a program really sponsored by whoever is holding that risk as the reinsurance company, like a Swiss Re or a Munich Re. And same thing with like when I liken a lot of this to the life insurance programs, right? Like John Hancock Vitality. It's a huge program, right? Sponsored by, I believe, Swiss Re, to really improve risk of the underlying life policyholders. So at the end of the day, the burden on them is not as heavy. So it's a very interesting kind of power dynamic, and you have to look at it as kind of a full continuum. But once you start to break down, you certainly start to see, okay, this is where the competing incentives are. Sometimes, hopefully, aligning incentives.
Yeah. One of the threads that we find is very common across all of the things that our consumers are spending money on with their car, whether it's insurance or maintenance or the car itself, is that having better data about the vehicle can get you a better price when you go to the market to buy whatever it is, whether you're fixing your car or getting new tires or, quoting insurance. And let me know, like, what do you see as some of the most common mistakes that consumers make around insurance, and how can having better data about your vehicle and your driving habits improve that without, even needing to, share or give up any privacy?
Yeah, I think just in general, there's a lot of things that people, again, to go back to your original point, insurance is tough, right? It's a nasty game, and a lot of people don't like to think about it. So a lot of people end up being sort of unoptimized or under optimized, when it comes to not shopping their policies enough, right? A good example of why that could help is, let's look at something, to your point of data that we could, work on together, is like, look at driving records, right? Or incidents. First of all, a lot of the time, that's a huge friction point in the insurance distribution process, because those reports are super expensive. You have to go to the state, like motor vehicle associations to get those. They can be really costly. And that's why a lot of the time you see this kind of like bait and switch methodology of, okay, a customer's, you got a $500 quote in front of you, all of a sudden then, the carrier's got you, deeper in the funnel, and they click run report, then they find a bunch of, accidents or claims on your record, and your price triples. And all of a sudden they're like, oh, what the heck? Like that's why a lot of people think they got bait and switched. Of course, it's a good reason they're doing it, because you need to, underwrite off those driving records. But if we could start to pull some of that closer to the the second we start to get the consumer, engaged, we can really start to set expectations better, even if at the end of the day, the rate doesn't necessarily, isn't materially impacted because the carrier owns underwriting. Setting better customer expectations is still a huge win, right? And saying,
Yeah.
okay, it looks like you've got this sort of driving behavior, or it looks like you've got, X, Y, and Z record, claims record.
And when you say this type
This
of
is
driving
what you could
behavior,
expect.
like what are the different types of driving behavior that can dramatically impact the rate that you're charged when you're quoted an insurance policy?
Yeah, I mean, it's relatively still early days in a lot of this, but generally, when it comes to driving behavior, the things on like a telematics program people are going to look at are braking events is always a big one, like hard braking. Speed is of course paramount. Staying under the speed limit, and people I believe are starting to get a little bit better about like mapping speed collected from the car with like almost like not geospatial, but okay, where are you? What's the speed limit? That type of deal. I mean, there's a lot of these interesting factors people are starting to price into it. But at the end of the day, the models are, as far as I'm aware, still fairly basic. They're not really taking into account a lot of the minutia that I think you guys are probably focused on when you're starting to look at, right, the entire book of data that you have, or can have access to, right, via a car. But those are primarily the things that they're going to look at. The funny thing is, though, we almost have to wind back even further, because there's a lot of other stuff we could do to improve underwriting, even before we get to specific driving behaviors, again, around what does your driving record look like? Do you have any claims? And that that could be gleaned oftentimes by just having a deeper relationship with the customer and helping them understand, why are you sharing this data with us, or why why is it in your best interest, right, to let us know, so we can start to help you understand, okay, this is the rate you might expect, or this is why your rate might increase.
Yep. What about just, I mean, one of the things that I remember hearing at the beginning of the pandemic, when the number of miles traveled went way down, was that insurance companies started making a lot more money because they had fewer claims. And I personally started driving a lot less, and I'm sure that I'm overpaying for insurance. I probably should go through the Marble Flow and shop my policy around. I don't know, maybe Geico is getting a good deal on my rate, because I probably had that policy bound initially when I was driving 300 miles a week, and now I maybe drive 30 miles a week. And I'm wondering if there's even like a smaller starting point where, like, when people are in the process of shopping around, like showing up to that transaction with some verified data that says, I actually only drive this car 100 miles a week, and like you can see it because the odometer is in DIMO. Like that sort of intuitively to me is a nice middle ground, because people will be able to not have to give up like how fast they're driving or how many hard braking events they have, but they can at least reduce the risk on the underwriting process a little bit by proving that the vehicle is not being driven 1,200 miles a week as an Uber driver or something like that.
No, I think it's a great point, and I think that's kind of what I'm getting at, in terms of there's something in between this continuum of just basic demographic data and driving data, and I think that falls right into there. I mean, listen, you can use something like the odometer to even inform somebody to say, hey, I think you might be better placed for a pay per mile auto policy, right? Which is one thing we're starting to do.
Surfacing that information to the user has a lot of value, because that once they get further down the funnel, they're likely to see the number that they actually want. And I looked at all of the other insurance, maybe some competitors or companies that are kind of doing some similar things to you guys. And I was always like kicked out at one point to a step where you had to like get on the phone with somebody. And
Yeah.
for me, I don't know. I mean, I'm just very averse to that kind of thing. And it sort of struck me as like, part of the process that, still might be a little bit broken, but could be helped with better upfront data collection and, kind of sorting you into the right swim lane at the beginning.
It certainly can. And I think, we want to, our goal is to not necessarily, eliminate that phone call, right? But what we want to try to do is provide the opportunity to not have the phone call if you don't want to, right?
Yeah.
Again, I think a lot of people fall into that sort of bucket nowadays. I'm the same sort of way. I will happily listen. The trade-off that we have to make in order sometimes to create these highly digital experiences and many times straight through experiences with insurance. We have to be comfortable with basically just asking for less data, right, and using less data. And sometimes what that translates into, right, is maybe you do end up getting a slightly higher rate, right, at one point, or you are able to look at less products, right, to say, okay, am I for sure looking at the entire 40 carriers out there and seeing where I could get the best rate. A lot of people are happy to make that trade-off and say, I will prioritize a digital experience for, yeah, maybe I'll have a 10% higher price than I might have elsewhere if I really spent the time to look through all this. But I think that's why like Lemonade has succeeded, right? I think in many cases, for one, I could go on my phone and buy a Lemonade renter's policy right now. I'd much rather do that and get what I know to be a decent price than all of a sudden have to sit down and canvas 15 different options and hop on the phone with somebody.
Yep.
It's an easier example because there's a lot less data required in renters underwriting. But that's ultimately where we want to kind of get towards. And when you start to collect things like that odometer data, it gets much easier to surface a relevant product to somebody,
Yeah.
i.e. a pay per mile product that, in many cases, the incentives can be aligned because that might be the cheaper product for them if
Right.
they drive under a certain amount of miles per year. And that's really what we're trying to build for. And I think what a lot of insurance distribution experiences miss.
That makes sense. So as you know, from interacting with a bunch of people on the DIMO team, we're enormous nerds and spend a lot of our time thinking about the future. And so we always like to, try to, especially when we're looking at, a new category like, maintenance or the used car market, like where are things going? And from your perspective in insurance, there's, a couple of pretty interesting technologies that are starting to make their way into reality in the automotive industry, autonomous driving, obviously the connected vehicle data that we're getting from DIMO users. How do you see that impacting the insurance industry, and what are the kind of larger sort of downstream impacts that the average person might not think about today that are going to be very real in maybe the like 3 to 5 year time horizon?
Yeah, I think there's a couple things. I mean, to take the first point around autonomous driving, I personally think it's a huge opportunity, and I think insurance companies should be all over it. It's a really challenging one because the idea of, I think, taking the human out from behind the wheel and all of a sudden, relying on computers to get everything done is a daunting one for a lot of people. And we're also nerds at Marble, so maybe we're a bit more trusting of that idea. But we're starting to see a lot of interesting data come in, right? So I was reading something the other day, I think it was Swiss Re, which, to go back to the point around reinsurers really holding the keys here in a lot of different ways. They had done a test with Waymo, and they had used I believe the initial data set was like 3.8 million or 4 million miles for one data set, and they benchmarked the Waymo driver against a human driver, and it didn't have a single bodily injury claim across per million miles, right? And then on the human side, it was, I think, 1.1, right, per million miles, which is super significant when you extrapolate that over the billions, trillions of miles being driven on American roads each day, right?
But a fatal accident
Getting
only happens
there,
once every 100 million miles. It's
sure, but again, so to that point though, bodily injury though, is
Bodily
still,
injury more common, right?
right, when it comes to insurance, right, that's what carriers are going to be looking at in terms of
Yeah, for
how can
sure.
I reduce claims, right? And then the same, even more so, right, property damage claims are going to be even more common, right? And more sort of, in the eye of insurance companies. um, and that's the other piece is Swiss Re, I think, pulled that through and had the same sort of effect on property damage claims. They were also markedly lower.
Yep.
So, we're super early days in that stuff, but I think uh, I'm really excited about it. I think it could have, I think it could have a huge impact on, insurance companies, and ultimately some great consumer benefit around ideally driving insurance rates lower. Um, but it's going to be a long road, right? Because I think we've already seen a lot of the challenges around Tesla, right? The recall the other day, right? And all these software updates that are going out.
Yeah.
I think there's still a lot of it's a huge uphill battle, and there's a lot of naysayers around, you know, the first death, right, that happens. Or, I know a couple of years ago, right, there was the one in San
Yeah.
Francisco where it's this huge thing. Meanwhile, people need to just take a step back and say, well, there's tons of deaths happening on every day with human drivers behind the wheel, right?
Underwriting robot risk
So
is a lot different than underwriting human risk.
it is, and that's the one piece where, you know can't even get into the first thing around the minutia around the underwriting rules there. But um, at the end of the day, I think the goal would be, can this decrease instances of bodily injury, property claims, right? And the answer, I think, has to be yes. We're starting to see it can be yes.
Yep. Got it. Um, so I know we've only got a couple more minutes left here, and I want to talk a little bit more about just the experience of using Marble and what you guys have your own rewards point and reward system. And I have to go through, and I know I went through the product initially, but I want to go back through again and check and see how many marbles I have and what I can use those for. Describe the whole like insurance wallet vision and the rewards ecosystem that you guys are building, even beyond automotive insurance.
Sure. The whole idea is again, we want to empower the customer to take their data kind of into their own hands, and that starts in many cases with our rewards program. When someone comes into the wallet or the super app and they add their policies, they share their existing policy data with us. They should be compensated for that, right? They're sharing that data, and then we're going to use that data. Hopefully, we're going to use it to save them money, right? And we're certainly not going to be using it for anything nefarious, but we still think, right, they should be compensated for that. So that's really where the rewards program comes in. And then to your point, insurance is not a fun thing to engage with, right? And again, we're not trying to be the Robin Hood of insurance, but it's a great way to get people to continue to engage and come back to the platform, right? To read our blog content, of which we have hundreds of posts aimed at demystifying insurance for people, helping them understand different coverage types. We have this kind of monthly engagement program we run where we push different content questions to folks. And at the end of the day, the key is, it's a great way to continually not only engage but compensate people for sharing that data throughout their life cycle as a Marble user. We do a lot of that third party kind of data collection through integrations when someone comes through the platform and adds their account, just like they would a bank account through Plaid. But then we do a lot of first party data collection where we say, hey, we'll give you 50 marbles if you let us know how much you drive on a yearly basis, right? And that's a great area, right, that we highlighted earlier, where we could even take the customer out of that, right, and make it even easier by saying, well, you're a DIMO user, you already have shared a lot of this data with
Sign the
DIMO.
transaction,
Let's
share your data with Marble, get your marbles right off the top.
easy,
Yeah, there you go.
right?
Cool.
So that's really what we're trying to use the marbles for, right? There's this huge sort of red line in insurance that you can't cross, which is rebate law, which says you can't compensate somebody for getting a certain policy, right, or getting a quote. And we never do that, right? We're simply trying to again better engage the user and reward them for doing what we think is going to create a better policyholder experience for them, and make them a less risky policyholder. So hopefully the carriers look at that and say, yeah, we're all for it. And we've seen a lot of good feedback from the carriers on what we're doing as well. So that's really the methodology and the idea behind the rewards. Today you can use it for gift cards, right? Some of the top brands, right? Amazon, Uber, Target, etc. You can use it for charitable donations. We do see some people redeem for charity, which is awesome. And then you can use it for crypto too. So we have an integration where they can use it for Bitcoin and Ethereum.
Oh, cool. I
But
didn't know that.
ultimately, the goal, yeah. So we're trying to nudge into that space too. But the idea long term would be things like cross redemption, right? When we work with great partners like DIMO, we'd love to say, let's get your marbles back into DIMO tokens, right? If you came from DIMO and you're a DIMO user, right, that was the initial relationship. You have a super passionate user base, right? You're great at engaging your users. Why don't, you should be able to draw those back, right?
Yeah.
And then, right, things like applying your marbles to premium payments, right? Being able to you purchase or put them towards value add services, right? Like maybe getting a dash cam or other things, right? So home security system. We really are trying to not just build an insurance app, but build a household protection, right, ecosystem.
Yeah. That makes
And
sense.
what does your household cover? It's a car, it's a life, it's a pet, it's everything.
Yeah. I think, and maybe this is uh, taking us a little bit further into the future, but I really do think that with all of these services that are kind of, mystifying and ambiguous to the average person, like paying your taxes or shopping for a used car or getting insurance, like there's really going to be, the starting point for everybody is collect all of your own data, put it in one place. You'll have some service like Marble eventually be more automated. There'll be AI in the mix, like able to basically be your agent and make recommendations to you proactively about, hey, the market changed and it looks like you could save money by doing this, like click yes. And that's something that we see very common across all the use cases on DIMO, is like starting the user with having their own data, whether it's the data from their car or their insurance policy information, and putting it in a place where a computer can access it and then make recommendations for them is sort of the next step. And I think kind of both where we're heading. Like we're certainly not going to go down this stack in insurance, but we have a great partner in you guys that we can get users onboarded into, and eventually potentially send their insurance data back as well and have it loaded into their glove box and like kind of give them that data backpack. And
Right.
that's something that I get really excited about, because I think it can take some things like insurance or maintaining your car and make it a lot more seamless and kind of get it out of the way in your life and allow you to focus on the other stuff that's actually important.
Totally. I mean, we talk about this all the time, sort of internally. We say, what's going to get people to engage with their insurance, right? It's not insurance itself. It's the things they love, right? When you make it about protecting and optimizing the things you love, i.e.,
Yeah.
your house, your car, your pet, that's when people start to care about it. So, our whole mission is to find like-minded, partners like DIMO that are really good at that and touch that asset more deeply, right? And are better at creating experiences around that asset, right? We can create the insurance experience. We're not going to be the expert when it comes to creating the auto experience. You guys are, right? So that's really what we're excited about. And at the end of the day, I think it could create a really powerful experience. And what gets me excited is also approaching the carriers together and saying, we've got the distribution side covered. DIMO's got the data, right, and the car side covered. We've got to be able to do something great here, right?
Right.
Maybe get one of those reinsurance companies involved and say, this is the data that we can have access to. Let's build around this together. And we're starting to see more carriers come to the table around that stuff. And to go back to our exchange earlier, that's where I think we get to that next level of really being able to use the driving behavior data and a lot of the great stuff that DIMO has or will have access to, versus just having to start a little bit smaller with things like the odometer, right? And what time of the day are you driving, where are you driving, that sort of
Yeah.
stuff.
That's pretty much all I'd be comfortable sharing at this point anyway. So I think I like that as a starting point, and I think that's the right approach. Matt, this all sounds very logical and reasonable. DIMO helps you collect your own driving data. We can send users from DIMO Mobile over to Marble. They can collect their insurance policy information. Maybe in the future, fuse it together with the driving data, share it with carriers, get a better rate. Like, who doesn't like this? And what forces are you battling against? Like, who is the enemy here, and how do you get past that, and like how do we actually deliver this better experience to users, and what are the obstacles?
Yeah, it's a really interesting question. We've dealt with this at a higher level as we've started to build Marble as this sort of central data repository. Um, we we certainly have gotten pushback. They're coming along and they're getting better at it. And I think we saw a very similar trajectory in how Plaid attacked the financial services industry, and banks, right? And by attack meaning they tackled it, not attack. Um,
Allow
with
consumers to
insurance
access their own
companies,
data. Yeah.
yes. With insurance companies, the challenge that we found sometimes is hesitancy over, well, so if you allow, the customers, or you're aggregating all this data around, what policies they have today, when their policies are expiring, how much they're paying today, is this just going to become a switching ecosystem, and this race to the bottom where all of a sudden, you're just switching a customer from my policy, every cycle? And generally our answer to that is it doesn't matter. First of all, in many cases, for the consumer, the benefit to the consumer of a race to the bottom is, yeah, I mean, pricing should
I
be
hear,
most efficient.
yeah, large corporation says race to the bottom, and I hear more efficient market. So that's yeah.
Correct. Consumer benefit. So we approach it from that way, and the other way we approach it is your customers going to be shopping on Google every policy cycle anyways, right? So by them adding their data to a digital wallet that gives them much greater utility and actually allows them to manage and optimize these things, I think you might, it's a benefit, as it is, and they're going to be out there shopping their policy every cycle anyways. We just want to make it a little bit easier for them to do that. So we come up against that a lot. And it is interesting to see the industry like slowly getting their heads around, well, it's probably happening anyways. It is a benefit for the consumer at the end of the day. And at the end of the day, also what we try to do is we try to say, if you're building a better experience, and you're building a better product and delivering digital services to your customer, then it's also up to you to retain that customer, right? We can only do so much, right? And yes, we're gonna make it as easy as possible for them to get the best rate, the best price, the best coverage. You should trust yourselves a little bit more too, and deliver digital applications to them, right? Allow them to easily bundle policies, right? I give a lot of credit to like USAA, for example. You don't see a lot of people switching away from USAA, yes, because of the military benefit, but B, because they have a great digital ecosystem and they surround their customers with a number of products that make sense for them. Who does that? Apple, right? So it's very similar
Yeah.
idea of, why do you see people like getting into these ecosystems and staying there? Because they've built around the customer in a very delightful way. So I think insurance companies need to also do that.
Makes sense. Makes perfect sense to me. Well, Matt, thank you for coming on and taking the time. And we'll have to have you back in a year or so when we have a more fully featured integration, maybe even before that. We'll see. But it's awesome to hear that you guys are building a tool that DIMO users are going to be able, and already are using, to save money on insurance. And that's a big check mark on the list of things that we can do with people's data to help them save time and money.
Yeah, no, I appreciate it, Andy. It was a great conversation. We're huge fans of what you are building at DIMO, and we're excited to also get our customers over to use what you're building, and take control of their data and their cars, and I think it's going to be a great ecosystem, and a great partnership.
Awesome stuff.